Hello, everyone. Welcome to Magnate University. I go by the name of Magnate, and I'm the Chief Market Analyst for Magnate University. There's a fundamental question that is always asked. Ngaba, how do we build success when it comes to the foreign exchange market? My answer is that trading in the foreign exchange market is not easy. Trading in the financial market is not simple. In actual fact, trading in the financial market takes a lot of time, it takes a lot of effort, it takes a lot of dedication. Because number one, you're trying to take money from smart people that are trying to take money from you. But also number two, you're trying to handle your emotional perspective, or you're trying to handle yourself, and it's a war against, you versus you. And ultimately it becomes really, really hard. And even for those people that actually know how to trade, or know how to rather analyze, but not many of them know how to trade, because when it comes to trading, now you deal with the emotional perspective of yourself. And so my general idea of really, really being asked, how can we build success when it comes to trading in the foreign exchange market, is tied up within the four concepts that we teach within our mentorship program, that has allowed people from not knowing how to trade to become consistent, successful traders, not knowing how to trade to become part of the top 1% of traders in the world globally, passing their prop-firm challenges, doing really, really well for themselves. And there's a four-part process model that we use when it comes to the foreign exchange market. But before we get to that, I want to really represent or simplify why one actually needs to trade in our time. Now, there's a gentleman called Henry Ford, and Henry Ford once had a quote, and he says the following: if the people of our time were to know our banking system, I believe that there would be a revolution by tomorrow morning. A lot of what is happening in the world thrives rather on people not having enough knowledge. Because if people have the knowledge, if people have got the information, a lot of things would be far different than what it is right now. Now, I'm not sure if you guys actually know, but in 1971, President Nixon took the dollar off the gold standard, which basically meant that the dollar was not backed by anything but by trust. If you look at history, you'll find that in the year 1910, there was what we call a Federal Reserve System, and they basically crafted this Federal Reserve Act and put it into play by the year 1913. And guess who was ahead of this act? John D. Rockefeller, J.P. Morgan and Chase, President, Woodrow Wilson at the time, Frank Vanderlip, and all of these elite bankers of that particular time. They drafted a system, in Jekyll Island, and this system was not meant to be shared with anybody. And one should ask themselves why the system was kept a secret. Now, here's the thing. 16 years after that happened, in 1929, there was a Great Depression. And people don't actually know this, but every 8 to 10 years after, there was always global recessions and pandemics actually happening. And so my quest to wanting to learn how to trade in the financial markets and investing time for the past 8 years is that I wanted to be out of this system. I wanted to be out of what people call the rat race. I wanted to be out of the system of dependency, of employment, and I wanted to learn how to actually make money on my own. Now, I can tell you guys one thing. Within the systems that basically exist, you guys can effectively take advantage of that. Now, I believe that trading is very, very important because it is the hedge to a lot of things, right? It is a hedge to job lack. It is a hedge to poverty. It is a hedge to many things. Now, I'm here to say that trading is not easy, but if you can learn how to do it, position yourself in the right way, I'm telling you guys can create success, and you can actually, create financial freedom. Now, one thing that I did, last year and, the year before, which was actually beneficial, is that we started to trade futures prop firms with clients of mine. And I saw for the first time clients making $30,000, $20,000, $50,000 in the space of a couple of months. And I believe then, we created what we call financial freedom. So what I'll be doing today is I'll be helping you guys with some information in terms of what actually, got us to, where we are, and how we were able to acquire such knowledge of a wealth of knowledge that has then allowed our clients to be profitable, ourselves to be successful in the financial markets, and for them to create, financial freedom and to be able to put food on the table through trading in the foreign exchange market. Now, I've been trading in the markets for the past 8 years. I've done programs through Yale University on financial markets. I've done programs on capital markets, behavioral finance. And so I really get the notional perspective of, how things actually work. My mentors in the market are people that have got over 8 to 10 years in the foreign exchange market. Now, when I started off trading from a representative point of view of becoming what they call price action traders, and then my trading obviously since developed. And right now, as it were, I'm currently doing my CFA, chartered financial analyst, and I'm building real good models towards trading, and the things that I've basically discovered, number one, from a micro macro perspective, and number two, from a quantitative and qualitative perspective. And these are things that I'm going to share with you. I'm going to share the 4 secrets that actually, what we call our 4 Magnate secrets that actually caused me to be successful and caused a lot of our students to be successful when it comes to understanding the dynamic of the foreign exchange market. And I can guarantee you, some of the things that we will share here, might never heard of them before. And this is because, later on in my trading, when I got exposed to different guys that worked at hedge funds, when I got exposed to different guys that worked at banking levels, I started to learn different kinds of models towards trading. Before, I was the guy that was trading through trend lines, for example. And, not that there's anything wrong with trend lines, but my trading, developed from, just price action to now SMC, what they call SMC. And I moved from SMC, and I'm now trading institutional perspectives when it actually comes to the market. And I can tell you guys, supply and demand, looking at the market based on institutional perspectives, is what has changed my story forever. And one thing I'm going to do for you guys is I'm going to teach you some of the models that we use to trade and some of the ways that you guys can actually benefit from the market. Okay, so I'm going to share my chart with you right now, and I'm going to show you some of the process models that we use to create success when it comes to the foreign exchange market. Okay, so fundamentally, one thing that we always say to our clients is seasonality in the market is basically everything. Now, as a fundamental perspective, one thing that we've got to understand is when we come to the foreign exchange market, when it comes to understanding Forex, one thing that is very important is to understand the drivers behind markets. Now, I've always mentioned this before, and I've always said this to a lot of people, that markets generally move based on what we call cross-border capital flows. Markets are just, as a function of money movement. Now, I can tell you guys, now when people and maybe large institutions look at the market, there are certain elements that derive where the market is likely going to go or what's likely going to happen in the market. Now, one thing that I picked up from learning about cross-border capital flows is, learning about seasonal interest in the market, to really just understand that certain things happen at certain times of day, and those things happen at certain times of day could also be things that happen at certain times of month and also certain times of the year, which is fundamentally what I'm going to be exposing you to today, to build your model towards learning how to really position yourself when it comes to the foreign exchange market. Now, one of the principles that we use is, number one, understanding the models of data. And I always say to people that if you're going to become a successful trader, you can never trade without data. It is next to impossible. Data in the market is essentially everything. Understanding how to take the data, compile the data, and then be able to make a trading decision based off data, that is going to be, where your strong point is in the market. Now, right on your screen, you see a tool called Season AX. And what I'm just going to do is, as you can see, this is, the euro dollar chart on the, as you can see here, top left-hand side of my screen. And this just represents the basic chart of EU when you're looking at it from a yearly basis. So from the month of January the 3rd, EU would normally buy. And then from the 15th of January, EU would short. And then again, from the 30th of January, EU would, buy. And then from the 4th of Feb, EU then would create shorts all the way up until the 18th of March. And you can basically see how the structure follows. EU will normally create its highs before April, which is on the 24th of August, and will likely to, short that on the 17th, 11th, 12th of April, and continue to move down until November. And then in the month of December, this generally EU would actually pick up. And this is the data for EU for the past 10 years. This is the data for EU for the past 10 years. In the past 10 years, this is exactly how euro dollar has actually moved. So one of our secret models to understanding the market is understanding the market based on seasonal interest and seasonal tendencies. And we believe that it is a very important aspect and a very important dynamic to learning how to trade in the market and to building, your ideas, that will effectively then make you successful and, profitable within the market. Because right now, and I've always said to people that, you don't have to guess when it comes to the market. When you make a trading decision, understanding seasonal interest of whatever pair that you're looking at, whatever stock, whatever metal is, whatever currency is fundamentally important. Now you'll see that if I go here and I'm looking at the euro dollar pair strictly, and I go to seasonality and I basically go to events. Now, if I want the data for consumer price index, which is US report data, and I click on CPI US, now this vertical line is a line that represents the day of the particular event, and you'll see these minus values represent the days before the event, and these plus values are the days after the event. Okay, now what you'll basically see over here is on the day of, in many events, and this is over the past 119 events, as you can see there, when it comes to the euro dollar pair, on the day of the event, in most cases, consumer price index data would actually cause the euro dollar to short in price. Now, this is something very, very interesting, because when you actually generally look at this and you look at it over the past 119 events, euro dollar would basically buy 2 days prior consumer price index and buy 1 day prior consumer price index. But on the day of consumer price index, the euro dollar pair would normally fall for about 2 days before it actually rises again. And I think this is something very interesting. So, and this is one thing that we teach our people, that when you've got the data, when you can understand what happens on NFP, where you can understand, the forecasted numbers, and and understand, the numbers that were there before, and being able to compile that to make a trading decision, then you basically have what we call a superpower. Now, the second element to data that we basically use is a platform that I always reference people to, and this platform is the Commodities Futures Trading Commission, because one thing that is very important is to understand seasonal interest in the market, is to understand seasonal tendencies when it essentially comes to the market. Now, if you go to the CFTC and you go to the Chicago Mercantile Exchange and you actually look for the short format data, what you'll see over here is that you basically see the commitment of traders report. Now, why commitment of traders reports are very important is that they build an incredible perspective when it comes to market analysis and market views. They build a very, very important analysis perspective when it comes to the dynamics of the markets, right? This thing is very, very important because you're able to learn and you're able to take data, combine it together, and being able then to produce significant kinds of results. Now, if you actually look at this data, there are two kinds of perspectives. Number one, you've got the non-commercials, and number two, you've got the commercials. Now, non-commercials would then basically be the people that are large speculators, and then the commercials would then basically be the big guys that are looking at the market. Now, I'm really interested in what the commercial traders are doing. Are most of their positions long, or most of their positions short? And if you can see over here, most of the commercial trader positions are short, which would then give credence to how the euro dollar pair would actually move in the particular market. Now, this is very interesting, right? Because non-commercial traders are basically trend followers, but the guys that actually drive price are commercial traders, and you want to look at them and you want to factor in the open interest. Now, open interest is very important, because if open interest has moved forward, or open interest has been positive, over the past week, then charts will actually go down. And this is something that is very, very, interesting. So if you look at the 7-day window of open interest, and you see that open interest has actually increased in value. If open interest has increased in value, then what would happen to the currency is that it would move in a downward trend. So you won't be looking at, buys, but you would rather be looking at sells in the market. So this data here is very, very important. Now, the question is, how can you take this data and being able to read it from a chart format? And this is why barchart.com is effectively very important. Barchart.com is a platform that allows us to look at the data and to look at the futures data. And what we're looking at here is we want to look at what's happening with the legacy report, and also we want to look at what is happening with the disaggregated report when it comes to this particular kind of data, right? Now, one thing that is important to look at over here is you want to look at extremes. Now, in most cases, if you're looking at currencies, and you want to look at the major extremes, now this for me is where it actually gets quite interesting. So where there are extremes, market would normally reverse where the extremes, and if you can actually click, so extreme, this is the most bullish day for the past, it's a 52-week high. And if you see red, you'll find that red stands for 52-week low. So if you're going through, if commercials are going through a 52-week high, then that means that price will most likely to go down. And if they've reached a 52-week low, then price would most likely to go in the opposing direction. Okay, guys. So for us, this is very, very important. If you want to learn how to be a trader, or rather how to build perspective as a trader, it's very important to look at your commitment of traders report, because it helps you guys, build perspective. And also number two, it helps you, to win like nobody's business. Okay. And I think for me, this is something that, you guys want to do when you are analyzing this kind of data, because number one, you are trading with a whole lot of perspective. And number two, you are not here in the market, guessing what actually should happen. Now, if you actually look at the euro dollar data, what you basically see, and I would obviously then put in my snapshot chart, you'd see that the chart is very interesting in the sense that, it creates a model for you to see what large institutional traders are doing, and then you being able to position yourself with large institutional traders and move in their direction of the market would then be a very interesting building point. Now, this for us is primal when it comes to understanding, the foreign exchange market. And obviously, this is the contract for March 2025. And this is the Euro FX chart. And you'll actually see that if I come here and let's say I release contract volume as an example, and where my interest is adding a technical study called the commitment of traders report, so we can see what large institutional traders are doing in the market. This will then come to build our referendum idea in terms of what's likely to happen in the market going forward. So CFTC data is very, very important because it builds notional ideas and it also builds perspective when it essentially comes to the foreign exchange market. And you can see these were large commercial traders, and large commercial traders that actually increased their longs, as you can see over there, which is then why price would have decided to actually move up or buy in that particular perspective as well. So you want to look at what large commercial interests are doing, and you want to look at what large commercial traders are doing, because it would get very, very important. In actual fact, here they actually decreased their shorts, as you can see, and the market actually went bullish to the upside. And by virtue of them decreasing their shorts, then what happened is that the market actually traded up to the upward direction. So any single time you see them actually increasing their short positions, as it were, markets would basically drop in value. And when they decrease their short positions, markets would actually short when it comes, or when they increase their short positions, market would actually short in price. When they decrease their short positions, market would actually buy. Decrease short position, markets were buying over here. They increased their short positions, markets were actually selling over here. And that is where you were able to get this whole rounded move, right? So CFTC data is very important because it builds a whole notion in terms of what institutional traders are doing. And the only thing that you have got to do is you've got to align yourselves to what institutional traders are doing. The third tool would obviously look at is FX Street, just obviously for news purposes and building your idea. And the fourth initial tool that would basically look at is the macro micro tool. And I also like to combine that with the St. Louis Freight data, so that I can understand, are we in points of inflation or not? What is the current GDP, and all of that. And this data is very important, more especially if you're building yourself as a trader. So this is what we call data analytics, which is what we obviously learn to study at Magnate University. The second element that we build ourselves on is the idea behind trading psychology. Now, what people don't know is trading psychology is one of the most important perspectives when it comes to the market. But trading psychology obviously comes with the rounded perspective, of understanding that markets, when you are number one dynamic, but also number two, when it comes to the market, you're understanding that markets are basically a probability centered game. And if you want to make it in the market, if you want to be successful, if you want to be a successful trader, you must then start to understand that market is all based upon the idea, of seasonal interest, number one, but also number two, the psychology. And as I said before, a lot of people know how to analyze, but not a lot of people don't know how to trade. Now, the big fundamental question is, why would people not know how to trade? People not know how to trade because of the fact that although they are good analysts, but their minds at the end of the day is what is actually needed to be successful. Now, these are the principles that we teach. So number one, having enough data. Number two, having proper psychology, which is what we hone in. We teach you, models from, Mark Douglas and, all of these, successful mental psychologists when it comes to the trading market. The third element is building yourself up and making sure that you develop what we call personal development in the market. And basically the fourth element is, data. Now, the fourth element is strategy. Now, what I'm going to do is what we've done at Magnate University is that, we obviously have a various amounts of strategies when it essentially comes to the market. But primarily, our biggest focus point is the focus narrative on time. Now, if you take time and you obviously mix it with price, that is where you'd obviously come up with models that would actually create your success when it comes to trading in the financial markets. Now, I've got a gold chart open over here, and I want you to do this basic case study as your idea to trading in the market. Now, you would likely see gold in most cases where gold would reverse, and this is the Monday scenario that then gives you possible market moves for the whole entire range of the week. You're likely expecting to short maybe on Thursdays or Fridays around 10, but Thursdays late, or maybe Fridays around 10, which is a very repetitive notion in terms of how gold moves. And I find this thing very, very interesting. So in other words, if gold was actually selling, okay, if gold was selling, by the time 10 a.m. comes, right, gold will actually then want to move in the opposing direction. So as you can see, gold was selling, 10 a.m. came, on the Monday, and now gold is actually gold seeks to move in the opposing direction. So this is the element of understanding price, but also understanding the dynamic behind time. Now you go to look at this same notion before this time window, gold was selling, and by the time 10 o'clock came, and then gold decided to buy for the rest of the week. Same thing over here, gold was selling exactly at 10 o'clock, gold found a reversal and continued to buy for the rest of the week. Here, gold was buying, and then 10 o'clock came. It actually the last move that it did was actually a sell, and then you'll see at 10 o'clock the market actually opposed in direction, and this was on the Monday. The market was buying here, 10 o'clock came, and then the market shorted. The market was buying here, 10 o'clock came, the market sold. The market was buying here, 10 o'clock came, the market sold. Let's look at another example. The market was selling here, 10 o'clock came, and although this moved a bit more later on, but you can see that the even scope of the move was to the upside. Here, the market was, buying, 10 o'clock came, it sold just a bit. So if your trading idea doesn't work your way, you just obviously look at, the breakout and take the opposite side of a trade when you retest where you would have entered. You can see here the market was buying just before the 10 o'clock window, and then the market just sold after that. And you can see here the market was buying, and then 10 o'clock came, the market sold. The market was buying, it sold, but it didn't last. If it broke your trading idea, just take the opposite side of the trend and you enter where you would have sold, and you now place a buy on the exact same region, and you see that moves in the opposing direction. The market was buying, 10 o'clock came, it basically sold, and the market was selling, 10 o'clock came, the market actually bought. So in many instances, you'll find that there's a repetitive notion of time versus price in the market. And there are certain elements of looking at the market that basically happen at certain times of the day. Now, what we build our most interest points in is understanding institutional supply and demand levels in terms of what causes the market to move the way that it does from a a price-centered perspective, and also looking at the ultimate supply and demand, which is obviously a high time frame. And then we obviously use some lower time frame analytic models to basically build our concepts towards how these prices actually move in the market. Now, fundamentally, you'll understand that time and price is the most important thing that you'd ever see in the market. Now, we've taught people these models, how to look at the market versus time and price perspective, how to find real points of interest that is based on macro statistical data, using platforms like Quant Tower, and so forth, just to create building perspectives that allow our people to not guess when it comes to the market, but to be really, really successful and profitable when it actually comes to the market. So there's certain times of the day where the market does certain things, and that is all based upon the data of the Depository Trust Clearing Corporation, the time that they clear trades and the time the trades are settled. And if you take those notional perspectives and you compare it to the market, and you look at seasonality, you look for supply and demand, and then you obviously look for models that we use to trade, you've then basically created a model for yourself. Now, in other words, what we're trying to build from is that once you start looking at the market, there's something that you'll see that is a constant, repetitive notion. And this is the model that we've always built our, trading capacity on when it comes to our traders. Always look at when market session opens, and there's time windows where markets creates the opening range, and when it does create the opening range, you're looking at taking the inverse direction, of that particular opening range, or in other words, you're looking at taking the direction of where the market basically creates the range open, and you're looking at buying either the range open high, the range open low. Now, this strategy has, boosted a really successful, 80% win ratio for our clients when it comes to the foreign exchange market. So if you're struggling to win, if you're struggling to understand how to actually trade forex, we've got the perfect program that can actually help you guys to move from one step of trading to the next step of trading, so you're able to build your own successful models when it comes to the market, and at the end of the day end up becoming a profitable trader. Now, as I said before, trading is not easy, and really takes some degree of work, and we've been able to do this very, very successfully, and most of our traders are very successful when it comes to the market. So I hope this gave you guys a bit of knowledge, and most importantly, I hope to see you inside. Now, I know this is not going to be for every one of you. This is going to be for people that are serious and for people that actually want to level up in trading. Okay, so thank you guys. See you at the bottom, because see you at the top, because the bottom is overcrowded. And remember, there's nothing that you cannot achieve. Any mind that dreams of something, you can actually achieve it. And Forex is not easy at all, but by basic principles, you can actually make it in the Forex market. Thank you so much. Enjoy. Have a blessed one. Bye-bye.